All right. Good morning, ladies and gentlemen. Good afternoon, good evening, depending on the location that you're joining us today. I want to welcome you to our training today on Monday, the 15th of July, 2024. Yes, we are halfway to the month of July. So welcome to our training. I want to also to welcome all the leaders that are joining us this morning, including the host, Leader Julius. We welcome you and we thank you for joining us this morning. So, am I audible enough? If you can hear me, can you give me a one in the chat? I'm trying to test my microphone. Is my network okay? Am I audible? If you can hear me, please give me a one in the chat. Okay, all right. So I'm audible enough. I'm audible enough. I can see I've got the confirmation in the chat. All right. So my name is Mopiwa, one of the coaches in Crypto Ambassadors. Um, I'll be your trainer from today. I think I'll be here for something like 2 weeks. So I would love you to join on this journey where we'll be looking at different types of materials that are going to help us understand the market better. Yes, the crypto market better. So I hope that you are ready to get into this. Last week, we started our class by looking at the TradingView application. All right. We started our class by looking at the TradingView application. That's where we normally start when we are beginning afresh. So we are right at the beginning of our lessons. Okay. So we started last week with the TradingView application, understanding how to navigate the app so that we are able to use it for our technical analysis. So today, on a Monday, we are going to proceed from there. To those who were not here last week, I'm very sorry. You can go to Crypto Ambassadors YouTube channel and then watch the recording of last week's lesson. All right, these lessons, they are recorded. We are live right now on YouTube channel, so you can go and watch the recording. Okay, so today we are going to pick it from there. We are going to start our lesson for today, and the lesson that we are going to look at today, understanding the use of TradingView. What are we going to use for it? We are going to use TradingView for technical analysis. All right, for technical analysis. Now, when we are getting into technical analysis, there is a certain language that we normally use in the crypto space. All right, there is a there is a certain language that we normally use in the crypto space when we are doing our technical analysis. So we are going to start from there. I'm going to share my screen. Okay, is my screen visible? Can you see my screen? If you can see my screen, give me one in the chat. If you can see my screen, can I have a one in the chat? If my screen is visible, kindly give me one in the chat. My screen is visible, kindly give me one in the chat. Give me a one in the chat if my screen is visible on your side. If my screen is visible on your side, give me one in the chat. Okay. All right. So I was saying that in the crypto space, as we'll be navigating here in this classroom, you are going to hear most of the times words that are used to describe a certain group of individuals, a certain group of people in the crypto space. So you need to get familiar with those ways so that you are able to understand who are we talking to when we are using those words. All right. So I want us to start from here. I want us to start from here. Um, I want us to start from here. Okay. So when we come to the crypto space, you are going to hear the word like bears. Okay. You are going to hear the word like bears. All right. You are going to hear the word like bears. You're going to hear the word like bulls. Okay. You are going to hear the word like buyers. Okay. You're going to hear the word like buyers. You are going to hear the word like sellers. All right. You're going to hear the word demand. Okay. You're going to hear the word supply. Okay. Supply. All right. So in the crypto space, most of the common ways that are used for or to identify a certain group of people, it is buyers. Okay, you're going to hear the word bulls, you're going to hear the word bears. All right. So when it comes to bulls, what are bulls? Bulls, they refer to buyers in the crypto space. Okay. Bulls, they refer to buyers, while bears, they refer to sellers. When we are talking about sellers in the crypto space, they have got a name called bears. All right. So when someone is saying about bears, when someone is saying about bulls, you should just understand that the person is referring to buyers and sellers. At a certain point, you are going to hear the word demand or you are going to hear the word supply. It refers to the same thing. When we are talking about demand, we are talking about buyers. We are talking about bulls in the crypto space, right? When we are talking about supply, we are talking about sellers, we are talking about bears in the crypto space. So you're going to see these ways being used interchangeably. We're going to use these ways interchangeably. Then you should understand what are we talking about when we say bears, when we say bulls, when we say buyers, when we say sellers, when we say demand, when we say supply. What are we really talking about? Is this clear? Is this clear? If this part is clear, give me a yes in the chat. If this part is clear, give me a yes in the chat. If this part is clear, kindly give me a yes in the chat. All right. So now let's go a little bit further and then uh, clarify something. When we are trading, when we are trading, all of us who are here, we want to learn how to trade. We want to become professional traders. Now, when we are doing the act of trading, we are able to do so because we trade what we call volume. Okay? We trade what we call volume. If there is no volume in the market, it's going to be difficult for us to trade. Okay? Yes. So the volume in the market makes, okay, makes the market to be liquid. Okay, we are talking about liquidity here. The volume in the market makes the market to be liquid so that we are able to trade. Okay, now, one thing that we needed to understand, like I was saying, we are talking about the bulls and we are talking about the bears. These are the two forces that dominate the market in the crypto space. Allow me to focus on the crypto space. Though we are talking about the financial market, that is a bit, that is a bit extensive. All right. But let's focus on the crypto space market. When we are talking about the crypto space, we are talking about these two types of, should I call them people? All right. So we are talking about the bulls, we are talking about the bears. These are two forces. These are two forces that dominate the market. These are the two powers that always fight each other in the market. When we are talking about the bulls, we are looking at buyers. We are looking at demand. When we are talking about bears, we are looking at supply in the market. We are looking at sellers in the market. So these are two forces that dominate the market. All right. Now, for us to understand the behavior of these two forces, at a certain stage, you are going to find yourself inside here. You're going to be part of this. As either you're going to become a bull, or at a certain stage, you're going to become a bear. So how do we study the behavior of the bulls in the market? How do we study the behavior of bears in the market? If we are to trade, remember, we are trading volume that is enforced by bulls and bears. So if we are to partake in this trading, for us to understand, we needed to know the language that is spoken in the market by bulls and bears. But before we understand the language, we needed to understand one thing that is very important. What is the character or the behavior? Yes. What is the behavior of these two forces? How do they behave? Now, for us to understand this behavior, we need to know how we can get to them. That is the reason why we will be looking at candlesticks. We'll be looking at candlesticks. Okay? Candlesticks. We want to know the behavior of the two forces, which is buyers and sellers, the bulls and the bears. How do we understand or how do we measure the behavior of bulls, the behavior of buyers in the market? How do we measure the behavior of sellers, the behavior of bears in the market? That's when we are going to come into candlesticks. We want to know, we want to understand. Yes, I said in the process, you are going to find yourself inside here. Have you ever become emotion when the market is bumping? Have you become emotion when the market is going down? Have you ever reacted? Yes. Have you ever seen people in the WhatsApp group complaining or getting excited about the market? Yes. How can we measure that? When you are excited, how can we measure you? Okay. Yes. When you are down because the market has gone down, how can we measure that feeling, that those emotions that you express? How can we measure them? So we are able to do so using the candlesticks. Yes, we'll be looking at candlesticks. That's what we are going to. That's why I'm laying this foundation so that you are able to understand where are the candlesticks coming from, of which I'm going to give a little bit of a history about the candlesticks. But I want you to understand, how do we measure the behavior of buyers and sellers in the crypto space or in any other financial market? Yes. How do we understand their emotions when they are conducting the act of buying, when they are conducting the act of selling? How can we measure their behavior? Then we are talking about candlesticks. Candlesticks. Are we flowing together? Are we flowing together on this page? Are we flowing together on this page? If we are together, give me a 1 in the chat. If we are together, give me a 1 in the chat. I'm doing the introduction before we get deep into it. If you are going to miss this part, then you might get lost in the process. Yes. You needed to understand why are we gonna be studying candlesticks, right? Why are we gonna be studying candlesticks? So you needed to understand that there are two forces in the market, the buyers and the sellers, bulls and bears. When they are doing the act of buying and selling, they express themselves, their emotions. How can we measure their emotions? So we are able to do so by the use of candlesticks. That's why candlesticks are coming into play. So I want you to pick me from there so that you are able to understand when we now get settled in underlining or understanding candlestick charts. Who are we studying? Me and you, because we are part of it now. That's why you have come here to learn. Yes. So you needed to understand yourself better. If you are to become a crypto trader, understand the financial market where you participate. All right. Okay. So let me go a little bit further now. If we are together, let me get into it now. Now, let us understand one thing. It's very important when we are looking at this subject of buyers and sellers, bulls and bears in the market. When we are looking at demand and supply, it's very important at the same time to understand this expression. When buyers, they are expressing themselves, when sellers are expressing themselves, yes, how do we become part of it? Okay, how do we join them? When we are joining them, when we start expressing ourselves, how is the world measuring us? Whether we are becoming a buyer, whether we are becoming a seller, how does the entire world measure our behavior? Now we are looking at candlesticks. Okay, we are looking at candlesticks. Now, allow me to give a little bit of history about the candlesticks so that you are able to understand where we are coming from. Yes. So candlesticks, they have been around for some time now. Yes, candlestick, they have been around for a longer period. Yes. We are looking at as early as the 17th century. Yes, when we are looking at the candlesticks, we are looking at a time as early as the 17th century. Yes, candlesticks, they have been around from this time, okay? From this time. Now, when we look at this time, in Japan, by this time, okay, by this time, that is around 1654. Now I'm giving history. There are people who doesn't love history. There are people who doesn't like history. They don't want to know. Yes. So now I'm talking about history now. You need to understand me now because we want to know where candlesticks are coming from. Okay. So I'm saying candlesticks, they have been around as early as the 17th century. By this time in Japan, that was in around 1654, there was rice trading. Okay, not only rice trading, but there were also other commodities that were dominating the market. So these items like rice, not only rice, they were also having rape oil. Okay, there was rice trading that was taking place in Japan, one of the commodities. All right, not only rice, but there was also gold. Okay, and there was also silver. Not only that, there was also rape oil, rapeseed oil. Okay, these are the commodities that were high when it comes to the market of Japan. But out of these, rice was dominating. Out of all these commodities, rice was dominating. It was taking almost over 75% of the market during this time. So a certain gentleman who happened to be also a rice trader happened to understand what is going on when it comes to this market of rice? Why is it that there are so many buyers and sellers in the rice market? What is going on? How can I measure? The gentleman was interested to find out the behavior of rice traders. Why is it rice is dominating? So this was as early as 1654. That was in Japan. All right. So there was a gentleman who was also a rice trader by that time. Okay, by that time. So this gentleman, let me give you his name. It's a Japanese name. It's a Japanese name. I don't know if I'll be able to write it correctly. Yes, but it's very important so that you are able to connect. You are able to connect. All right, you are able to connect. So a gentleman who happened to be a rice trader by the name Munehisa Homa happened to be puzzled by how rice traders were performing in the market. Then he said to himself, why is it rice is dominating beside silver, beside gold, beside rapeseed oil? So he wanted to understand the behavior of rice traders in the market, the emotions that are involved. So this guy is the one who came behind the use of candlesticks. Okay, he is the gentleman who who was behind the use of candlesticks. So he is the one, we can call that he is the originator of candlesticks. So he came up with the idea of candlestick charts so that he's able to understand or to analyze the emotions. He understood that there are emotions when it comes to buying and selling. So for one to understand these emotions of buyers and sellers, the best tool to use by then, it was the introduction of candlesticks. That's why today we are talking about candlesticks, candlesticks, candlesticks. Yes, the gentleman Munehisa Homa happened to be the guy, a Japanese for that matter, who decided to understand the emotions that buyers and sellers were expressing themselves in the rice trading. Yes. So candlesticks were introduced to measure the emotions of rice traders. From that time until now, when the candlesticks were being spread to the world to be introduced in the financial market, when the banks were coming into place. Remember, this time where there were no banks, all right? So when banks were emerging, when banks were coming up, it's when they decided to take the use of candlesticks so that they can be used in the financial market. So today, as we speak, that's where we are coming from when it comes to candlestick charts. Did I carry you through? 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 Okay, all right, sorry for that. Let's proceed. So I was giving the history of candlesticks so that we are able to understand why are we in the business of understanding the market using candlesticks. All right. So that is the history. Now let's get into why candlesticks. Why is it that they couldn't use other things? Can we use other things to measure or to understand the financial market, the crypto market? All right. Why candlesticks? Now, let me come back here and then give you an explanation why candlesticks. So a candlestick, okay, when we are talking about a candlestick, we are looking at a visual, okay, a visual representation of what is going on in the market. When someone is asking you, what was the trainer saying about a candlestick? I want you to pick this. A candlestick is a visual representation of what is going on in the market, or what is going on in the thing that you are studying, because you cannot only use candlestick in the crypto market. The financial market is also using candlesticks. Okay, so when we are talking about the financial market as such, we are looking at measuring the financial market using candlesticks. So candlesticks are a visual representation of what is going on in the market. All right. So why are we interested in candlesticks? Candlesticks, they are very important when it comes to trading analysis. Let us understand. Candlestick, they are very important for us to understand the trading concept. It's very important. In what way? One of the things why do we use candlestick is that we are saying candlesticks, they are a visual representation. Candlesticks, they are a visual representation. What do I mean a visual representation? By looking at a candle, by looking at a candle, by looking at a candle, all right? By looking at a candle, you can see what is happening. What is happening, okay? I'm still having my candles here, though we did not go deeper into it. But when I say visual representation, let me change the time frame here to a smaller time frame so that we are able to understand the meaning of visual representation, okay? Probably let me take it to 1 minute. Can it go to 1 minute? Let me see if it can go to 1 minute. Okay. So when I say a candlestick, it is a visual representation of what is happening in the market. When you look at this, I want you to pay attention here. You are able to see that there is a movement, okay? There is buying that is happening. There is selling that is happening, all right? For you to track the price, for you to be able to track the price, whether the price has gone up, whether the price has gone down, you are able to see that by tracking using the candlestick. So by looking at a candle as such, you are able to see visually, you are able to see the real thing that is happening in the entire market. Where you are seated, you are able to know what buyers and sellers are doing in the crypto space. If you are to pick a certain crypto, for example, this is Bitcoin, all right? If you are able to see what buyers and sellers are doing in the Bitcoin market, you are able to look the entire market by just looking at a candle. So this is a visual representation, okay? Can you see what is happening? Can you see what is happening? So I'm saying by looking at this, where you are right now, you can see the entire world market. When it comes to the market of Bitcoin, what is really happening? Okay, so this is what I mean when I say candlesticks, they gives us a visual representation of what is happening in the market right now. What else? Why do we use candlesticks? The other reason why do we use candlesticks? It is because candlesticks, they are flexible. They are flexible. I want you to understand why are we studying this before we go deep into candlesticks. You need to understand why a choice of candlestick rather than other charts. We are looking at a candlestick chart. There are other charts that we can use. But why candlesticks? So I'm saying candlesticks, they are flexible. What do I mean they are flexible? By looking at a candle itself, okay? By looking at a candle itself without using other financial market indicators, you are able to understand, you are able to see that price did go high, price went down. You can just see by looking at a candle itself. You can determine that this is how high the market went, this is how high, how down the price went. So just a candle itself, it is flexible. I remember one time, Leader Julius was teaching us, analyzing the market using one candlestick, measuring a candle, just one candle, finding yourself where can you enter, where can you exit, just by looking at one candle. That tells me that the candlesticks, they are flexible, because you cannot enter a market using one candle, just analyzing one candle, if candlesticks are not flexible. Are you following, guys? When I say candlesticks, they are flexible. Apart from being a visual representation, they are also flexible. You can trade the market just by looking at a candle. When you see where buyers entered, when you see where sellers entered, you are able to find a position where you can stand yourself if you want to join the market. Not only candlesticks being flexible, all right? Not candlesticks being flexible, but also we also need to understand that candlesticks, they are more valuable information when we compare them to bar charts. Remember, we do have bar charts. Yes. What do I mean? I want you to have a look here. These are candles, right? These are candles. What you are seeing on my screen is candles. Now, I want to change these candles and change them to something else. Now, I want you to tell me which one is easy to use to analyze the market. I'm changing it to bars. Can you see I'm having bars here? All right. Right now, it's candles. But I want us to change to bars and see if you are able to analyze the market using bar charts. Okay. So look at what is on my screen now. Look at what is on my screen. Can you be able to analyze the market easily without using the bar charts? Or if I may put a line here, if I may put a line here, can you be able to analyze the market using this line easily? Can you be able to do that? That's why I'm saying that the candlesticks, they are flexible, not only flexible, but they are also easy to use than bar charts or line charts. That's why we are looking at candlesticks. All right. Yes. So these are some of the reasons why do we go for candlesticks. All right. If you are able to understand this, believe you me, you're going to be able to know how the big boys plays in the market. If you can understand this, you're going to be able to know how the big boys, yes, they are big boys that are here in the market. That's why I'm saying there are two market players, buyers and sellers, bulls and bears. If you are able to understand these candlesticks, you're going to know how these big guys plays in the market. Are we together? This is introduction, guys. This is introduction. We haven't gotten into it. I'm just introducing now. I'm just introducing now. We are still drinking milk here. We are still drinking milk. If we are together, give me a 3 in the chat. If we are together, give me a 3 in the chat. Give me a 3 in the chat if we are together. We are still drinking milk, guys. We are still drinking milk. We haven't started eating a hard food yet. So if you miss this, if you don't understand this, I don't know if Coach Julius comes and start talking about moving average. I don't know if you're going to understand. He is. So You need to stick to this. This is the intro of our lessons. This is the introduction of our lessons. So that is the reason why we are using candlesticks to analyze the market. Probably someone was asking and say, why is it that we are not using bar charts? Why are we not using line graph to understand the market? So that is the reason why we are studying candlesticks. Now let's go now and probably now, should I say opening now the lesson? Yes, let's open the lesson. Okay, let's open the lesson. This is 1 minute. Let me change it to 15 minutes. Yeah, let me change it to 15 minutes. Okay. So I said that we do have buyers and we do have sellers. The buyers, they are referred as bulls. Now I'm speaking very slow now, very slowly. The sellers, they are referred as bears. So when bulls, which are buyers, are opening the market, they normally open it from the bottom, then they go up like this. Can you see what is happening here? I want you to look here. I'm teaching at the same time demonstrating. So bulls, they open the price from the bottom, then they go up that way. While bears, when they open the market, they open from the top, then they come down. What I'm simply saying is the sellers, they open the market from the top, they come down. The buyers, they open the market from the bottom going up. So when you can see here, you are able to see that we are having two colors of candles. We are having two colors of candles. There is green color and we do have red color. The red color here represents sellers. The red color represents sellers. The green color represents buyers. So the candle for buyers is painted green, while the candle for sellers is painted red. This is just a matter of choice. What color do you want to use to represent buyers? What color do you want to use to represent sellers? Okay, you can use white. Okay, you can use white instead of green. You can use black instead of red. All right, so you are able to see that there is a green color that is moving up and down, and there is a red color also that is moving up and down. So we have chosen these two colors to represent our market players in this chart. So when you see a green candle, we are talking about buyers that are doing something. When you see a red candle, we are talking about sellers. That's why you see the presence of red candle and green candle. So the green candle represents buyers. The red candle represents sellers. These are the two colors that we have chosen for our candles. Are we together? Give me a 1 in the chat so that you are able to see why do we have two colors, green and red. The red is for the red is for sellers, while the green is for buyers. So the buyers, they open from the bottom, they push the price to the top. The sellers, they open on top, they push the price down. Those are the two market forces, demand and supply, buyers and sellers, bulls and bears in the market. Okay, so we are together. Let's continue. Now, let me bring a slide here so that we are able to follow closely. We want to look at parts of a candlestick. When you look at a candle, this one is moving, okay? This one is completed in the 15 minutes time frame. When you look here, I do have 15 minutes time frame here. So every candle that is moving there, you can see that it's gonna take 15 minutes, or it has already taken 15 minutes. So I want us to analyze a candle itself. What are the parts? What comprises a candle? What makes a candle? I want us to look at that. So I'm going to get out of trading view. I want us to look. I'm going to use my slides to bring meaning to this. All right. So allow me to bring my slides here so that we are able to use them for our understanding of the market. All right, for our understanding of the market. But maybe probably let me start from here. Let me start from where we are right now. Okay, so you are going to see, that when a candle is opening, okay, it opens somewhere. The opening of a candle, it means the opening of a price. We are trying to analyze a price action. So when a candle opens, where the candle opens, it is where the price is starting. Now, when you look at a candle as such, I just want to pick one candle here and we look at it. All right. So let's use this candle here, this one. This is a candle that is representing buyers. So I said that buyers, they open from the bottom, they close it on top. They open from the bottom, they close it on top. So if we are to look at the entire candle, you are going to see that this is the opening of the market. Okay, and this area here where the price closed, it is called the close of the market. So this is the open and this is the close. All right, so we want to look at part of a candle. We are saying where the price open, it is called the opening. Where the price closes, it is called the close of the market. That is the first part. Have you understood that? First of all, this is a green candle. It means the opening of this candle, it is on the bottom. The closing of this candle should be on top because we are looking at buyers, a candle for buyers. So first of all, these are the two important things that you need to understand before anything else. The opening price and the closing price. The sellers also have the same thing. They do have the opening price and the closing price. The only difference is that the sellers, they open their price on top. They close it on the bottom. But both of them, they do have the opening and the closing of a price. Are you tracking? Are you tracking? If you are tracking, give me a 1 in the chat. If you are tracking, give me a 1 in the chat. If you are tracking, give me a 1 in the chat. If you are tracking, give me a 1 in the chat. If you are tracking, give me a 1 in the chat. If you are tracking, give me a 1 in the chat. If you are tracking, give me a 1 in the chat. Give me a 1 in the chat. If you are tracking, give me a 1 in the chat. We have just started candlestick anatomy, meaning to say parts of a candlestick. When I say candlestick anatomy, we are talking about parts of a candlestick. All right? Parts of a candlestick. Can you define a candlestick? Can you name parts of a candlestick? That's what we are looking at. When you see a full candlestick, what comprises a candlestick? What comprises a candlestick? Okay, what comprises a candlestick? That's what we are looking at. 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 Okay, so you are tracking. Let me share my screen again. Let me share my screen again. Then we finish up for today. We are moving slow. so that you are able to understand before we go deeper into it. So let me bring this slide here. Let me bring this slide here. You might be a little bit of confused, okay? Or you might see a little bit of a difference. But I want you to understand that in this slide, the white candle represents buyers, while the black candle represents sellers. Okay, I have already shown you that. So don't get confused. This white candle represents buyers, which is green when we go to the market, while this candle represents sellers, which is red when we go to our trading view app. So I wanted us to look at these parts that we are calling them components of a candle. So I said the buyers, they open their market from the bottom, they close it on top. That's why you see we do have the open, which means the opening of the price. Where the price has closed, that's what we call the close of the market. Sometimes before the market closes, the price can go higher. Okay, the price can go higher. Then after that, you discover that sellers, they will come and do some activity of selling. So you discover that the price is not going to close where it went high to. It might close somewhere. So it has created what we call a high in the market, where prices went high in that time frame. Remember, we'll be trading in different time frames. So when you look at your market, whether it's in 15 minutes, whether it is 1 hour, in that 1 hour session, how did the market go? Did it go high? Did it go low? If it went low, how low? So you can see we do have the low of the market, we do have the opening of the market, we do have the close of the market, we do have the high of the market in the course of the buyer. We are looking at a candlestick for buyers. So this is what we call parts of a candlestick. The main ones happen to be the opening and the closing. Once price opens, it's when you see how down price went, creating the low. Once price opens, you will see how high the price went, creating the high of the market. That's why I'm saying these two, they are the many components of the candle. So you need to understand what is the opening, what is the closing. The same applies to this candle. You can see that the market opened here. I said that sellers, they open their market from the top and they close it at the bottom because they are selling. Yes, they are selling. They are taking profit. So when the price goes up, then you see them pressing the price down, which we call selling. So when sellers are entering the market, they open their market from the top, they push price down. Yes. So you're going to see that the market for sellers, they normally open it on top. Their opening price is on top and their closing price is at the bottom. So you can see the open here, the closing here. When the market opened here, how high did it go? When the market opened here, how low did it go? So you can see that we do have the low of the market, the close, the open, the high. So between the close and the open, between the open and the close, this thing here, okay, it is called the real body. The space between the opening and the closing, between it, that area, it is called the real body. That area is called the real body. So if we are to summarize, on this chart, we are going to say the filled part, this filled part of the candle, it is called the real body. First of all, the filled part of the candlestick, it is called the real body. The thin part, can you see we do have thin lines? Thin lines, yes. We do have the thin line here. We do have the thin line here. The thin line that is emerging from the body. What do you call this thin line that is poking above or below the body? It is called a shadow. Okay, it is called the shadow. Now, if this shadow is on the upper side of the candle, it is called an upper shadow. If the shadow is on the lower side of the body of the candle, it is called a lower shadow. The same applies to both. I'm using both candlesticks. I'm using both candlesticks. So I'm saying the thin lines poking above and below the body, they are called shadows. Okay? The thin lines that are poking below and above the body of the candle, they are called shadows. When the shadow is above the body of the candle, it is called an upper shadow. When the shadow is below the body of the candle, it is called a lower shadow. All right? Yes. Now, when you look at these thin lines, when you look at these thin lines, where this thin line ended, the same applies to the bottom one. The thin line where it ended, that area where the thin line ended, it is called the high of the market. This is how, when price opened here, this is how high the price went. So sometimes you are going to see the presence of the shadow. Sometimes you are going to see the candle has got no shadow. So where the candle closed, if there is no shadow, when you see a candle that has got no shadow, it is full. Where the candle ended, where the candle closed, that becomes the high of the market. But in this case, when a shadow has been presented, it means where the shadow is ending, if it happens to be an upper shadow, where the shadow is ending becomes the high of the market. Where the shadow is ending in the course of the lower shadow becomes the low of the market. This is the low, this is the high. This is the open, this is the close. The same applies to this candle. Is someone confused? Is someone confused? Are we still friends? Can I come to trading view? Are we still friends? If we are still friends, give me a yes. Candlestick anatomy. We are not coming back here. We are not coming back here. Tomorrow we are not coming back to candlestick anatomy. No. We are moving forward. So you need to understand what is the part of the candlestick. Before we start looking at different types of candles, you need to understand one first. One candle. What is its parts? Yes. What comprises a candle? What comprises a candle? Can you see this candle? Can you see this candle? Almost you can see that it nearly come to a picture where it could not display shadows. Can you see? When I was talking about the high and I was talking about the low of the market. So sometimes you're going to find a filled up candle like this. Probably it does not even have shadows at all. No shadows at all. So which one becomes the high in that type of a candle? Which one becomes the low? So I'm saying in this case, when you see a filled up candle like this, okay, where the body closed becomes the low or the opening. It depends which candle are you looking at. For example, this is a green candle for buyers. All right. This is a green candle for buyers. So this is the open, this is the high. So if it is complete like this without shadows, where the market opened becomes the low of the market. Where the market closed becomes the high of the market because there is no shadow. That's what I was saying. Sometimes you see this candle is a green candle. It is filled up. It does not have shadows like this. So where the market has closed, where the market has opened, those areas becomes the high and the low of the market respectively. That's what I was trying to say. That's the reason why I came here, because sometimes you start asking, sometimes you see a candle, it has got no shadows. So where is the opening? Where is the close? Okay, where is the high? And where is the low? That's what I was trying to explain to you. It's not all candles that are having shadows. That's why I'm saying the too many parts, the too many areas to look at. The opening price, the closing price. Because once price open, it's when you see the creation of the high, okay? The creation of the high or the creation of the low, because the market has been opened. After opening, what will be the last thing to happen? The close. The market need to close. Yes. Have you understood that? I don't want us to start something new. I just wanted us to dwell on the parts of a candlestick. Candlestick anatomy. Candlestick anatomy. That's what I want us to dwell on. So guys, that's what I wanted us to learn today. I'm ready to take questions now on the lesson for today. I'm ready to take questions. If you're having questions, please ask me. This time is for questions now. Yes. If you're having questions, please ask me the questions. If you're having questions, please ask the questions. You can raise your hand or you can type it in the chat. You can type in the chat or you can raise your hand and ask me the question. I want us to move slowly. We're going to be here for 2 weeks analyzing the candlesticks. We're going to be here for 2 weeks analyzing the candlesticks, looking at different types of candles. Yes, so I don't want to move faster. So we have looked at the candlestick anatomy today. Whatever I was saying, I was bringing you here. Yes, whatever I was saying in the beginning, I was bringing you here on the candlestick anatomy, part of a candlestick. Questions so far? Okay, seems like we don't have questions. So that makes us to come to the end of our session for today. Let me find out from Coach. Is Coach Julius here? Okay, yeah. Coach Julius, any announcement? It's a Monday today. Probably there is some announcement to be made before we end our Zoom. I think Coach is resting. He doesn't want to say anything. All right.
I'm here. I'm here.
Oh, okay. Okay. All right. Okay. All right.
Yeah, why
Before
should
you
I
come.
be sleeping? It is 8:38 here in the Pearl of Africa, in Uganda. Good morning, ladies and gentlemen. Uh, Thank you so much for joining our call. Thank you so much for the history of the candles. You see, when you learn the history, you fall in love with the opportunity. Good morning, ladies and gentlemen. Welcome to our call this morning. You know, this is day 2 with Coach Mo. I always stay in around, just maybe I get off in case of a call, but I'm always here. but we want to be grateful for some of you are coming. I request you to be consistent. And most importantly, I expect now all our students to have downloaded the TradingView application. Make sure the TradingView application is on your call. Make sure you go and look at those things called the candles that Coach Mo has been able to share with us. And those who have been in our classes for some time, make sure you're practicing. Okay, we are practicing. We have opened up. Our classes for coaches. If you want to be a coach, we have opened up our classes for coaches. Reach out to Coach Mopiwa or me myself, and you join our group of mentors, of mentees. But you must be able to be a V2 and above. If you are not, please don't come. Yes, do not waste our energy if you are not a V2 and above. Yeah, you must be able to be a V2 and above. We also have another classroom for traders. Okay, if you can be able now to analyze the market and be able to be a good trader. We also have our class for traders, but there we only looking for people who are already experts. Amateurs, please don't come. So you must be an expert now. You might do a test. You might do a test to prove whether you're a trader or a joker. So if you cannot be able to do that, please don't come, because once you fail the test, then you may not like it. So you must be good in those two games. So if you are V2 and above and you like to train, our training classes are simple. We shall give you a platform. We shall make sure that we teach you what simple things you do not know, so that you join to be a mentor of mentees in the Crypto Ambassadors community. So if you like that opportunity, our two venues are open. For now, close it will be by the end of this week. We shall be closing it up. And then we move with those that will have subscribed to our mentees. But you must be a V2 and above. If you are not, we don't need you, no matter how passionate you may be in the business. So we wish you the best. Make sure you go and practice, ladies and gentlemen, and take action, because it is action takers. You know, there is something very important. When I wanted to be successful, the first thing I learned was to write notes. You know, I know people just come here and stay here. I have since I joined the business, I have 11 books that I've written. I've been able to write notes. Now, currently, if someone tells me something in Royal Q, I open up. I've been taking notes, friends, since I joined the business, even these trading classes. So I basically believe that anybody who's here, if you are here and attending Coach Mopiwa classes, get a notebook. A notebook is a good book that has a hardcover. Get a notebook that has a hardcover and have a nice pen. And in this notebook that has a hardcover, whenever he's teaching, write important notes. Why? Because note takers that are action takers are money makers. If you're not a note taker, and in the psychology of learning, you understand better whenever you write. Your brain has a cognitive aspect of recognition that is seated on the visual perspective whenever you write. So as you learn and you write, the brain has a cognitive aspect of understanding. You know, I know some of you are not scientists, but friends, when you write something and you look at it, the eyes are like a camera. Okay, the eyes are like a camera. They take the picture, because that's I think the best way I could understand. I could give it to you. They take a picture. They take a photo. They take a picture of what you have written, and then they interpret it. The brain interprets the picture taken by your eyes. Okay, so that's why sometimes when you are looking for a certain document, in your mind, the mind reflects the picture. It tells you that you are looking on has particular entities. It has particular entities. So some of you are not takers. That's why you are struggling with the trading. Hmm? That's why you are struggling with trading. You don't take notes. You pretend to be very smarty. You pretend to be very clever, and that's why you are struggling. You were not taking notes. You just want to come here. You pretend to be very busy. You are not taking notes. But if you want to be a very successful trader, I will give you evidence. I've been taking notes. I'll be taking notes. And when I'm coming here to teach, I don't waste time. I just say I'll teach such and such. And I open up my notes, friends. I open up my notes. I open up my notes and I use my notes to reteach. So if you want to build a very big community and be very, very effective, okay, make sure you take notes because note takers that are action takers are money makers. And I know why most people struggle in business because they don't understand these cycles. That's why I think when I will be coming here, I've been taking notes. When I get into one of my I have a book I call the Encyclopedia of Cryptocurrency. Mm. When I want to do, maybe I want to go to TikTok to teach something. I have my book called the Encyclopedia of Cryptocurrency, and here I have everything I need to know. Welcome to the beginner course of cryptocurrency. What is the history of money? What is crypto? The basics of blockchain. What is the difference? Research how to set up a wallet, secure wallet, avoiding scams. What is the history of money? So I just open up my book. You know, some of you don't take things serious. I just open up my book and I say today, let me go and I discuss this. I open up my encyclopedia, the introduction to blockchain, the application of blockchain. What is metaverse? What is AI, tokenization, exchanges, how to use trust wallets, close to DEX. I, I have my encyclopedia. I have notes. What is tokenomics? I've learned these in these classes of crypto. Just that I sometimes come and I teach and I remain very specific. But all these things I've been able to learn them and I've written them in my encyclopedia. It's a long book. It's a long book, friends. And since I started taking notes, my life has never been the same. And some of you, you come here, you just stay here. Now, friends, before I finish, I want to end with the following. There are 5 things you need in your business, and these are key. 1, personal growth. The reason why we create these trainings done by Coach Mopiwa is to give you personal growth, is to enable you grow in the business, to become better than you joined us. Number 2, you need mindset. Mindset matters. You don't have to believe in me for me to be successful. But I have to believe in myself for me to be successful. Some of you are getting stuck in trading because you want other people to believe in your personal trades. But you just need to believe in yourself for your trades to be successful. You can be successful without other people believing in you. It is important for you to choose to believe in yourself. And how are you going to be able to do this, my brother, my sister, is to believe in your purpose. Put them together. If you have a low personal belief in yourself and a low personal belief, you will not start opening up trading view. You will not start looking at these candles. You need to believe in yourself. Friends, if I have a high personal belief in myself and a low personal belief in what I do, I will not continue. I will quit. If you want to be successful in a business, it is important to have a personal belief in yourself. But also you need to have a high purpose belief. A high purpose belief in what you do. High purpose. And you will continue even when sometimes you analyze the market and the market goes against you. I don't know if I'm making sense to someone. So, yes, it is important you believe in yourself, but it is important to have a high purpose belief. Okay, so if you have a low personal belief and a high purpose belief, you will do the business, but you will not reach your dreams. You have a low personal belief, but you have a high purpose belief in the business. I believe so much in crypto. You see crypto, royal Q. But you don't believe in yourself. Why are you over talking about the business? Royal Q, I'm part of crypto. I'm part of royal Q. You don't believe in yourself. Why are you wasting time here? If you have a low personal belief, but you have a high purpose belief, yes, you will do the business, but I want to guarantee you, you will not reach your dreams. You know, there is a difference between reaching your dream and making some money. And I want to separate the two things. There is a difference between reaching your dream and making some money. There are people who have been part of this business, they are making some money, but they are not reaching their dreams. Someone makes only $50 and he wants to step on everybody's head because they have made $50. Someone makes $100 and wants to step on everybody because they have made $100. It is okay to have a high purpose belief. But if you do not believe in yourself, I want to give you assurance, you will do the business, you will make some money, but you will not reach your dreams. But if I have a high personal belief and a high purpose belief and a high purpose belief, all things will be amazing. Have a high personal belief and have a high purpose belief. So your attitude and your mindset are key for you to be successful. Friends, I wish you all the best in this venture that you have started. Make sure when you learn, you believe in yourself. Make sure you believe in crypto. The rest is going to be history. Along your journey, make sure you practice what you learn here. God bless you. Have a nice day. See you tomorrow. Make sure you are consistent. Don't come today and then you don't come tomorrow. Consistency is the key to the results you are looking for. Thank you so much. Love you all. Bye-bye.